Gupta sir, you can start.
So let us start.
One mute हो गया था वो. Good evening, friends. I am K.K. Gupta, your host. On behalf of the Association for Financial Advisor of India and Research in India, we extend our heartiest welcome to our members, to the bankers, to the entrepreneurs. I think today's topic was very of importance. We are just talking on the request of our members. So we have chosen the subject of strengthening the balance sheet to improve the access to the financing. I think this is the most important issue for which we called eminent speaker like Mr. Taneja, who is the ex-banker, who is ex-general manager of the Central Bank of India, and Mr. Rohit and Madam Sharma. I think are the chartered accountant of the firm. And Mr. We are waiting for the T.N. Bansal. He may join any moment. He's also chartered accountant. So, the balance sheet play a very important role. The balance sheet is of as on one day. When we are talking about 31st March, that is balance sheet of that day. And when we are talking about the trading and profit and loss account, that pertain to a full year from, from 1st April to 31st March of that financial year. I think these are the important aspects. Any banker, when you are going to the banker with the balance sheet or with the CMA data or from the analysis of the balance sheet, the banker insists, what are your current assets? What are your current liabilities? And what are your current ratios? And what is the debt equity ratios? And what are the projections? So my feeling is that the sale plays a very important role. If the banker accept your sale figure, projected sale figure, then other ratio will automatically come to the point and your assessment of limit can be there. Now traditional banking is not there. Now important issues there, like when I joined the banking in about 50 years back, so there was a feeling that if you are asking for a big limit, they will give you small limits. Now that period has gone after Tandon Chore committee and so many other recommendations, Naik committee. So something has come very concrete where the assessment of the working capital limit is also important. That we also going to discuss how the projections is there, how the working capital assessment are be taking place, and what is the strong benefit of the strong balance sheet that we are also going to discuss. So in the balance sheet, we are finding out some cash is proportionate to the other current assets, proportion to be very high. That we are also going to discuss. And some assets are there which are not used in the business. That is not a core asset. That is a non-core assets. So why that non-core assets are being taken away from the balance sheet, and why they should not be part of your balance sheet also. That point we also discuss, and how you can optimize the balance sheet part. That means these are the aspects we are going to talk in details, because the financial, even for a rating agency or something like that, they also insist for the financial statement from you. And after having a financial statement, analysis of the balance sheet or the profit and loss account and other information, past history, they are coming into a rating points. I think these are the major issues. So we are going to discuss all in details with you. So good evening, friends. We are with us, Mr. Kamlesh Taneja, who was General Manager, Corporate Credit, Central Bank of India. And he was also worked as a field general manager at Chandigarh, Delhi, and Bombay, and regional manager Bombay regions also. His BSc, MA Economics, Diploma Communication Engineering, limited insolvency examination from IBVI, and enrolled in IPA. His CIIB, a diploma in treasury and risk management, qualified independent director from IICA, and he is a very intelligent person. I know him since long because I am also a banker. So I think he is the right person to talk. What are these, sir, Mr. Taneja? What I am asking you, what does strong balance sheet look? How you feel that this balance sheet is strong, but the current ratio is only issue. When we are talking to the banker, they are talking about the current ratio 1.33. If there is okay under second method of lending, that is a good. Whether you see that only current ratio is important for 1.33 or some other ratios are also important in the respect of it. And we are talking about the balance sheet, what about the use of the profit and loss accounts also? Whether the operating profit and because when I am a member of the one of the committee, we are talking about the operating profit. Operating profit is coming from the, you can say, if you are earning the interest, investment, something like that. That can also be considered as operating profit. I think that point we were going to discuss with you, Mr. Taneja. What does a strong balance sheet you feel? Where you feel that this is a strong balance sheet. So, have any view of Mr. Taneja for that? Mr. Taneja. Mr. Taneja, unmute कीजिए आप.
Good evening, sir. Good evening, everyone. And thanks for inviting me on behalf of Indian Association of Financial Advisor and the Surgeon India. I think whatever experience I have till date, I will try to share on the basis of my experience and certain academic issues. Just like in engineering, we say there is when we go for building structure, it has different parts. The different parts are like foundation, there is a plinth level, there are beams, there are pillars, there are columns, roofs, window, etc. Same is in the balance sheet structure. So you cannot depend upon only one current ratio or something. The balance sheet should have all the things in place. Then we can say it is a strong balance sheet. My view on balance sheet is that it should be consistent. It should have the capacity to grow. It should have predictability, and it should have flexibility to changing economic scenarios. Whatever economic scenario changes very fast. But we have seen 6 months back there was 0% or 1% rate of interest. Now the rate of interest has gone to the roof. So our balance sheet should be able to withstand this type of economic changes also. So my view is that in strong balance sheet, there are three important things which I always say. First is what is the capital structure in the balance sheet? Whether capital structure is a mix of only capital reserves, or it is a mix of capital reserves, long-term debts, and short-term debts. So there should be a mix of all the things. It should not be only a capital or only a debt. We should not be highly financial leverage or operating leverage. We should have all the things. Then bank also sees whether ICR is okay or not, just like you were discussing operating income statement. So ICR is very, very important in today's environment. Bank sees whether they will be able to serve our interest comfortably or not. Then there is a DSCR also. What is the tax rate structure for capital? That is also very, very important. What are the stock market conditions? Whether company will be able to get the equity in shorter term or longer term or not. So these are the things which I see are very, very important for stronger balance sheet, along with current ratios or other things which banks see. So my view is the balance sheet is not seen only from one angle, that is banker angle. Balance sheet is seen from different angles. Just like balance sheet is seen by investors also, balance sheet is seen by banks and financial institutions also, balance sheet is seen by tax authorities also, balance sheet is seen by regulator also, balance sheet is seen by investor and other government authorities also. So strong balance sheet is that balance sheet which fulfills the criteria of most of the I will say verticals which are looking into the balance sheet. It should not be strong in one parameter. I have seen many balance sheets where they have done excellent tax planning, but when you go to the bank, they will not give you any limit on that balance sheet because the tax planning is superb, but other things we have ignored. So the balance should be basically, it should be balanced. It should not be unbalanced sheet. It should be balanced sheet from many angles, which I have already conveyed. So my thinking is that the balance sheet will be strong if it is good from all angles who are showing. Maybe strong at some point, maybe normal at some point, but it should not be weak for different organization or different vertical who are looking after the balance sheet.
Very nicely, Taneja sir, you told. Like there is something is there, cost capital we are talking about.
Yes.
You are also talk about the term liability or something like that. What is cost capital, Mr. Taneja?
Sir, in any company, there is a authorized capital and paid up capital. I am talking about companies. I will not talk about smaller companies. So they cannot go more than the authorized capital. And if company wants some type of capital from the promoters, they bring in the shape of the quasi capital. So quasi capital is just like a unsecured loan, or in the shape of preference share, or in the shape of convertible debentures. So that can be brought into the company, which has the flexibility to take it back if required. But bank has put a certain limit. They don't accept quasi capital more than the actual capital, actual paid up capital of the company.
Quasi capital can be considered a net worth of the company?
Yeah. We are to the extent of original capital, which is paid up capital in the company.
You are right about the capital, and you are talking about the current ratio and DSCR also. You are talking about the DSCR.
Interest coverage.
Then you are talking about the fund flow statement or a cash flow statement.
Yes, sir.
You feel that if there is some short term, you can source or utilize for a long term. Whether you consider the balance sheet is a good balance sheet for that?
Sir, basically, no balance sheet is good balance sheet or bad balance sheet. It depends upon the promoters. Some of the promoters are aggressive in nature. Some of the promoters are conservative. Some promoters are moderate. So if a promoter is aggressive, he will try to use that short-term fund for long-term sources. But generally, moderate and conservative type of promoters, they use long, because in every working capital requirement, there are two types of working capital requirement. One is permanent working capital requirement. Even you reduce the basically cycle, there is no sale in the market, you have to produce something, you have to keep something working capital, that we call as a permanent working capital. So permanent working capital should always, my view is that should always be financed from long-term sources. But and your short-term working capital requirement, that is we called as a temporary working capital or flexible working capital, that we should source from short-term financing. So my view is that some portion of the working capital, which is of permanent nature, that should be financed from long-term sources. But few of the customers or few of the companies are using short-term sources for long-term uses. They are the aggressive promoter who believes in higher rate of return. If you see the return on different type of promoter, they will get higher rate of return, but the risk is very, very high. So it depends upon the promoter's mindset, promoter's psychology, whether I should take better return by going for short-term sources or long-term sources. But as a prudent banker, we always say you should use part of the long-term sources for short-term, not others.
Mr. Taneja, something is there on return on capital we are talking about. If any stock market is A, or we are thinking like that, the return on capital should be higher. That should be good return. So
Yes.
we are seen in so balance sheet, because your experience also goes when you are talking about the corporate finance branch, you work and you work in a corporate office of the credit of the big bank. So when we are talking about return on capital, when we find out, so you are paying much higher interest. Like when you are returning to the investor, it is very much higher, lower. Have any view on that, Mr. Taneja?
Sir, again, it depends upon the philosophy of the company. If the philosophy of the company is to share the profit in the shape of dividend, then there are many companies who gives maximum dividend, or they go for buyback of their shares, through which they give the money back to the investors. And there are few companies who believe in wealth maximization, or there are companies who believe in EVA, we call the economic value addition. So it depends upon the philosophy of the company, what type of company you are investing or what type of company you are financing. So you have to understand their philosophy also. But I think return on capital is always calculated. But whether it is given back to the investor or whether it is given to the stakeholder depends upon the philosophy of the company.
My point is something different. I am asking with the return on capital, they are about 5 or 6%. Like bank deposit rate or something like that is much higher. So whether it is a very feasible for that company that should not pay more than that. That is the point. Because return on capital They are showing very, very less in all the balance sheet of the company.
So generally, return on capital employed, generally we are not considering for working capital finance. I am very making it very clear. Generally, we do see in project financing. In project financing, we see return on capital employed also and RAROC also. Risk adjusted return on capital, that we see in project financing. But as this seminar is on for working capital, then it will become a separate chapter.
This seminar is not working capital. This is a strengthening of balance sheet.
Balance sheet. So okay. So my view is the return on capital.
This is not for working capital.
Okay. So return on capital should be seen. It should be minimum 12%. I always feel. And if we go for RAROC, risk adjusted return on capital, it should be 14 to 15%. But we should count only on equity share, not on total net worth or total book. Generally, so this is again.
That is a point. Taneja, you are a very intelligent person. I am just talking about not on the net worth of the company. It is capital. What is capital employed? We are talking about the reserve on that return. I think it is very, very difficult to.
Yes. If you go for return on net worth, also it becomes.
We are discussing on the balance sheet side only.
Yes.
Because the profit and loss and trading account is also most important issue. Because that reflects the profitability of the company.
Yes,
I've seen some balance sheet of a big corporates also, so which may be having a AAA rated companies also.
Okay.
So I find that if I reduce the investment interest or investment return on investment, there is a minus operating you can say profit.
Yes.
For that, because they are investing somewhere and getting the interest or dividend and showing a big profit. So
yes.
Consider them AAA rated companies. So have any view on that?
So there are generally these companies are core investment companies. Generally these type of companies are core investment companies who invest. Just like I will give you an example of Tata Sons, or there is a company India Bull Real Estate, or there are many companies, or Aditya Birla Group. They work as a holding company. They invest into their subsidiary or their joint venture, whatever they want.
Their work is only to invest.
Their work is only to invest.
I'm not talking about that type of industry. I'm talking about an industry who is manufacturing. I don't want to name it because I was also a member of the MU committee of Government of India. There I found out a very big company are showing like that. That I pointed out. Then they rectify all such things. The format they have changed. I'm just talking about it. Have on that view anything you're in mind?
So basically, what we see when we are calculating the tangible net worth, but I want to convey it, we reduce all the investment made by the company to other companies, and then we come to the tangible net worth, and we calculate all the things on the basis of adjusted tangible net worth. So from the liability side, that issue is resolved. Now the main issue is from the operating side. If they are getting most of the income from their investment. So maybe, but I feel that they don't have proper avenue to invest in the system or in the company or in the related company. So they may be keeping that money in the treasury for short-term term for bigger expansion or buying some asset in the near future. That may be their strategy, but that is not a rule. That is not a rule.
Thank you very much. I will come back to you, Mr. I think Mr. Bansal joined. Mr. Bansal. जरा अनम्यूट कीजिए मिस्टर बांसल जी बांसल सर बांसल अनम्यूट कर लीजिए प्लीज मिस्टर बांसल मिस्टर बांसल मिस्टर बांसल जी मिस्टर बांसल so I will come back to Mr. Bansal. So I am coming to Mr. Rohit Gupta, who is a chartered accountant. Mr. Gupta is a fellow chartered accountant and information system auditor. He became a chartered accountant in the year 2012 at a young age of 20. I think I have yet to see such a person who passed it on because we done our MA or MSc at the age of 20, where he had done a chartered accountant at the age of 20. And currently managing a partners of M.R. Gupta and Company, chartered accountant. He also worked with companies like Dalmia, Cement, Bharat Limited, Steel Authority of India. He was head of the business planning and analysis department at Dalmia Cement. He is also legal advisor in Rourkela Chambers of Commerce and Industry. He has written a various articles and spoken at various seminars organized by professional and industrial organizations. He is a trustee of the various social organizations as associated in other social organizations holding different positions. He is currently into data analytics and visualization and goods and services practices. I think he is the right person to talk. Sir, Mr. Gupta, just I want to know from you, what is the benefit of the strong balance sheet? If we are talking about Mr. Taneja talk about the strong balance sheet. If you have any viewpoint of the strong balance sheet, please let us know. Or beside that, Mr. Taneja has covered it. So I asked so many questions from him. I think he's a very efficient person, very intelligent man, and he given reply very clearly. So what do you feel that any benefit for a strong balance sheet, Mr.
Good evening. Good evening, all of you. Good evening. Thank you. First of all, thank you, Gupta sir and Peda sir. And I welcome you all in this very beautiful webinar organized by Association of Financial Advisors of India and Resurgent India. So, as very rightly discussed by Taneja sir, that the strong balance sheet is the pillar of any financial decision which will be taken by any person who is the user of the balance sheet. As he told that there are users of the balance sheet are very different persons, like tax authorities are also the users, the regulators are the users, the bankers and the stakeholders like shareholders are also the users of the balance sheet. So when we talk about the strong balance sheet, we have to go through the ratios, different ratios which decides the position of the balance sheet. Like in this year, in Schedule 3 also, government has brought lot many changes and which has mandated that lots of ratios like current ratio, debt equity ratio, other ratios on capital employed, etc. has to be disclosed on the balance sheet for each and every balance sheet. So government is also trying to see that how the things are rightly disclosed in the balance sheet in the very correct manner. Like the current, we are talking about current assets and current liabilities. So what is the current liability? First of all, we should understand is current liabilities are those liabilities, those obligations which have to be repaid in the next 12 months. Likewise, the current assets are those assets which have to be realized in the next 12 months. So if we are disclosing the things in the correct manner, then that is the correct that makes the balance sheet a strong balance sheet. Because if we are not disclosing the like receivables, we are hiding that these receivables are not recoverable, or the inventories are not recoverable. So what will happen is the ratios will also not show the correct picture. If we are saying that some company has a current ratio of 1.33 or 2, but the underlying assets and underlying liabilities are not correctly shown in the balance sheet, correctly figured out, then what will happen is the ratios will also show wrong picture. And as rightly said by Taneja sir, that different industries has different kind of purview and different they have different decision making authorities, which what do they do is like I have seen balance sheets in which they have a lot of current assets, they have FDs, and they have balances in current accounts. They are not utilizing the funds correctly. What does that say? So that is also not a strong balance sheet. Okay. And if we have lot of liabilities, like we are funding our all the programs, like current programs as well as the long term projects also through the liabilities, only through outside persons, then also that is not a correct strong balance sheet, what we say. So this is all about the different figures, which different ratios which we have to go through before deciding that whether it is a strong balance sheet or not. Okay. So strong balance sheet, how does it help us? Like we have lot many bankers here with us and all the persons who are dealing with banks day in and day out. So they will tell that if we have a strong balance sheet, then we have very much access to financing. Like whenever we will go to bank, bank will have to, they have a defined process that these are the ratios which have to be checked, these are the figures which have to be as per the benchmark of the industry. So whenever we will go to them and ask for some funding and something like that, then they will be happier to give us the funding if we have a strong balance sheet. Likewise, if we talk about startups also, startups balance sheets are totally different from the balance sheets which we go through in our day-to-day life. Like, they have intangible assets more than the tangible assets. If we see their balance sheets, we will not able to understand that how their valuations are going so higher and like that. So but when the investors of startups, the ecosystem, when we go to that ecosystem, what we see is that they value that those intangible assets, the numbers of users of the applications, the number of clients, all those things. So they value those things. But when we go to banks, taking a balance sheet of a startup, they will not understand all those things because they will not value that. So that these are the totally different views in the different types of industry. So these are the benefits of strong balance sheet, I will like to say that.
A very good, important aspect you are talking about the startup. And you also talk about the intangible assets are higher than the tangible, what you're talking about. Still, investor prefer to invest. I have so many examples. If you're talking about some big company with IT company where there is losses are there, still banker are preferring to give advance to these people because their strength of the customer is also available. Lekin my point is here is what is the benefit for the strong balance sheet? As a borrower, as a banker, or as the entrepreneurs or as the customer also. Supplier also required some strong balance sheet. Strong people are required. That means supplier also required the balance sheet. Another issue what I want to talk to you what are the other the contingent liabilities. What are the contingent liabilities? Whether such companies are having a good balance sheet when talking about the current asset, current liability, their assets is very high. You can say current ratio 1.33, even 1.5 also. लेकिन the non-current assets, you can say intangible assets. What I'm talking about the other assets, contingent liabilities are much higher. So how you view that, Mr. Gupta?
See, contingent liabilities are a very important aspect in any balance sheet. These are out of the balance sheet item, but they play a very important role when we see a balance sheet. Like, contingent liabilities are those which a company has can be liable to pay in the future if he loses any court case or any litigation which is going outside the company, or any guarantee, corporate guarantee he has given to any other group companies, loans and advances. So we have to go through the contingent liabilities also when we go through a balance sheet, and that shows the liabilities which can occur in future and which are not coming into calculations when we are calculating the ratios, considering the current assets liabilities, or when we are considering the net worth of the company, then also it is not coming into the calculation when that contingent liability is sitting outside the balance sheet. So what will say that the benefits, if we are talking about, again we are talking about the benefits of strong balance sheet, that is that plays a very important role in taking new finance as well as in establishing the finance which we are currently utilizing from the banks. Like, every year the bank assess that whether the customer who has taken the cash credit limit, or the limits which he are using, is whether he is using that limit for his current obligations, current payments, or whether he is using it for long term projects. So that is only seen through the strong balance sheet only. So that is from the banker's perspective, we will say. And again, if we are coming to the other users perspective, like tax authorities, the tax authorities will also see that whether they are like in GST right now. Currently we are seeing that if we have to pay our liabilities within 180 days, so GST authorities are going to see your balance sheet whether the liabilities are getting paid within 180 days or not, or who are the creditors who are not being paid in this time frame. Likewise, all other things are there. Like if we talk about the inventories, there are very obsolete inventories. If we are not showing that inventories correctly in the balance sheet, then the ratios will not be getting calculated.
Very nicely, Gupta. I think you are a thorough in the subject because we're talking about the bank finance. I'm talking in a different aspect is as an investment banker, investmenter also. Even you want to invest in any company, you see that what is the you can say strength of the balance sheet of the party, and we also seeing the rating of the company. What is the rating of the company? And as an investor, as a banker, or anybody is there. If I want to invest something in a share market also, so I'll see that what is strength of the balance sheet of the party and how he perform. Past performance also play very important role for taking any decision of any the company. I think this is also major aspects. So
Yeah,
you are
like in the case of startups, they see the forecast of the revenues which will be coming in the coming
yes,
years,
yes.
and that is the base of the valuation basically, and that comes only through the balance sheet which is in the hand.
Startup time, just telling you, I have done one webinar in a startup where I call the investor also and a starter firm also. So that's why I'm asking them because startup had no past experience. Only the future projection is available with them and the product what he got to want to do it. So that investor are telling me I will see the experience of the party, experience of the person, what is the qualification, what type of product he want to manufacture, and whether it is a marketable product or something like that. That is also strength. Then you were talking about any collateral security you're asking. That's his certificate, his qualification is a you can say margin and a collateral security for me. I think this is the subject you are talking to me. Mr. Gupta, I will come back to you. Now I'm coming to respected Madam, uh, Kanta Madam, Kanta Sharma ji. She is BA, she is a CA, BCom, FCA, certified woman director, certified, he's a director, labor, internal auditors, 29 years experience, founder partner of Grandmark Associate, CA firm, and having 25 branches beside 2031 partners. I think she's expert in this line of the financial aspects. Madam, just I want from you, what are the if you see some balance sheet of the party when she say the huge cashes are there in comparison to other current assets or other you can say assets. So how you view that and how you view the cash flow of the statement of the party? Have any view, madam, on that aspect?
Yeah, I have a view on this. First of all, I would like to address the basic why this seminar is connected. What is the strength in balance sheet? What is the strength of balance sheet? And
Very
how
nice.
can we make a strong balance sheet? Strong
Very,
balance sheet, I'm very much stereotype in that respect. I would like to see only a balance sheet with high asset base. I'm not going to favor any startup unless it is they have worked on the ground. In my view, the strong balance sheet is the one where high asset base assets are there, and if it is a if it is a manufacturing assets should be there. What is the value of their machinery? How old they are? These are the things to be considered while we go for a loan from the banker's perspective, from a broader perspective of a health of the country, where money should not sink well if the money is landed to that organization. And if it is a service providing company like Infosys, TCS, like what should be seen is their quality of their debtors, their clients, their cash flow, and their quality of their creditors, how old their creditors are, how old their debtors are. These are the facts where we can, and their relationship with their clients, and how old their clients are, and how old their staff is. We should not rule out the strength of manpower in an organization. If we have old satisfied staff in our organization, then it is a very much, I would say, rich company who is able to manage his staff. So these are the things to be considered while we what can say there's a strengthening of the balance sheet. These are the strengths of the balance sheet. Now coming to the topic assigned to me, if there's more of cash than other current assets, I would say there are many reasons why there are more cash in the balance sheet. There could be two phenomena for that. One is the cash is for a short-term purpose. Maybe due to any untoward operation, it has come. Maybe they have sold a capital asset. Maybe they have arranged some funds because of to meet any future plan. This may be the reason they are having high amount of cash. You're on mute.
Okay, to Mr.
Sir.
You were on.
Please carry on.
So the part assigned to me is when there's a cash more than the other current assets. So there can be two types of, we can see in the two angles. One is that why this cash is there, is it one time or it is a routine feature? If it is a one time, say because of sale of capital asset, maybe because of some funding of some special project which are going to be executed, then it will be settled in the definitely promoters or shareholders must be having something in their mind, and that cash will be settled at a certain period of time. So we should not be concerned about that. The thing comes when there's from the operation, there's a lot of cash is coming. How that cash is being dealt with? We need to take care of that cash which is coming to the routine operation and which is more than the other current asset. It means the company is highly appreciable asset company, that people are trusting on that company. Their sales turnover is so high, their creditors are so less, their debtors are so less, that less than 90 days debtors are there, creditors are paid off immediately. That's why there's a lot of cash lying in that. So in that case, they need to manage how their high liquidity they are having, how to manage that cash. That need to be taken care of. So in my view, that cash, if they are routine basis, they are collecting so much of cash. So how to dispose of? What they can do? They can pay more dividend to the company, to their shareholders. They can buy back their share their own shares, so that shareholder base is reduced and the net worth of each shareholder is going to rise. So this way they can settle their cash and take care of their cash and they may invest in certain funds where they are liquid also and they are high return. They are in a position to take high risk, so they can do a lot many things if they have more cash. So in my view, I'm very much stereotype being person. So I say, yeah, that's it. Is a cash rich company, a healthy company, and one should tend to invest in that company. Banker would be eager to loan them. They may not require loan because they are already cash rich. So we should look for that type of. It may lead to the healthy in nation, I would say. If all the companies start behaving like this, there's no manipulation, that promoters are not taking money out of without any reason. So manipulations which we can say. It means the cash is kept in the business only, which can generate more and more cash. So I think having extra cash is a virtue, and it should be managed properly also, so that it can generate more cash. Paise ko paisa kehta hai, we know that. So it should be invested and more cash rich, low shareholder base bana ke increase the wealth of the every shareholder, increase the wealth of the nation, and increase the salary of the employee, make their families happy, would be the advantage of having strong cash in the balance sheet.
But that is not the case. I have seen a balance sheet where they have crores of balance in the current account, but they are not having these kind of views which you are telling.
You see, I am looking at it the professional point of view, investor point of view. I am not the investor. I am an investor, so I would look for this type of treatment by a limited company or with a company. But
Madam, point is that if we are having a surplus, cash surplus, so another side, we see the balance sheet on the liability side. They are having a bank balance. Why they are keeping cash with him? Why not availing the less limits? Because the interest is the major elements. One time, I'm not talking about, I am with my personal experience. I'm telling you, there are so many companies where they are utilizing one side is a limit from the bank. There is a debit balance. Another side, they are having a cash in hand or cash at bank.
that is
Don't
quite
they don't
contradictory
balance the
situation. That is very
so I am
contradictory
asking them
situation.
why you are keeping such a huge cash. सर सडनली जरूरत पड़ सकती है, मैं पड़ सकती है तो आपके सीसी लिमिट है उसमें भी विड्रॉ कर सकते हो ना. So why you are keeping
So,
such a huge cash and
if
paying interest?
huge cash balance available, your creditors should not be more than 15 to 30 days.
There are certain,
Yeah.
I'm just talking about certain company where they are keeping the balance with the bank and they are obliging the banker. Other side, they are availing the limits. Such thing was happening in that aspect. Thank you, madam. I think you have rightly touched. Just one point I am asking you on the, have any view on the fund flow statement?
Fund flow statement is again the consequence of all this, because fund flow is largely the what is fund comprises of debtors, movement of stock, movement of debtors, movement of cash, and what when you are going to FDs or investment going to mature. All these are the sources of funds in a state organization, and just how you are going to invest that or spend that money. That is the where the prudent policies should be taken care of, so that it is there should not be any contravention to the, as bankers should also be satisfied that their funds are being utilized in a proper manner, and it should not be detrimental to the interest of business as well as society at large. So
That is proper utilization of the funds is required under a fund flow statement, or you can say cash flow statement. How the money in the short term they have received it, and how they utilize for long term, or long term sources utilized for the short term, or the long term used for long term sources. That type of differentiation is also there in the cash flow statement, or you can say fund flow statement. Banker under a CM data they are telling a fund flow statement, when otherwise we are talking about a cash flow statement. That was the difference there. Mr. Bansal, you can unmute yourself. Mr. Bansal, unmute कर लीजिए आप please. Mr. Bansal, so I am just talking to Mr. Chartered Accountant, Mr. Bansal. He is a chartered accountant, CIB. He was a qualified chartered accountant in 1968. I think he is a long back. You can say how many years is there, 1968 batch. Mr. Bansal is there. He is a retired banker from Central Bank of India and law graduate. Presently acting as a core member of the Banking and Finance Committee of WIRC of ICAI, Institute of Chartered Accountants of India. He is an associate member of the Indian Institute of Bankers, having a vast past experience of 50 years, including 30-year experience as a banker. I think he's a very, very intelligent. A certain person has no such age of 50 years. He has much experience for that. Mr. Bansal, have you viewed anything about the strong balance sheet? Mr. Bansal. बांसल जी आपकी आवाज नहीं आ रही है, थोड़ा ऊंचा बोलिए ना बांसल जी प्लीज. Not getting you, Mr. Bansal. I think some problem with Mr. Bansal system is there. Now coming back to Shri Taneja sir. Taneja, you are my pillar of this today webinar. So just I am asking you, what we are talking about the working capital, limit of working capital size. What is significance of the working capital management? We always talk about the working capital में क्या है, net working capital minus में है, net working capital नहीं है, current ratio 1.33 नहीं है, 1.117 नहीं है, first method of lending में नहीं आता है. So these are the working capital management. So now from the assets management, this is assets management. So assets financing. Now assets financing say they have changed to a cash flow financing, cash vesting financing. So now floor is yours. Have your views, Mr. Taneja. अनम्यूट कीजिए तनेजा जी, आप भी अनम्यूट कर लीजिए सर.
Sorry, sir.
No problem.
Good to all of you again. I think we should go into the concept of working capital, how bankers are calculating, and then we will come to the conclusion whether it should be a cash flow system or it should be a second method of lending or other method of lending, whatever banks are adopting. First of all, we should understand the business and industry. That is the most important thing. What is the nature of business and what is the nature of industry? Just like Mr. Gupta told, in startup, though the company is losses, but investors are still investing. Even now, government has come with a scheme where they will be giving the guarantee for startup funding. So every business, every industry, we have to see. We have to see the seasonability of raw material and seasonability of finished good. Seasonability of raw material means just like oil or castor oil, or which comes for a very short period of time, and if you don't procure it, you will not get that raw material throughout the year. Similarly, some of the industries, their sale is for 1 month or 2 months or 3 months in a year, and rest of the month there will not be any sale. So they keep a lot of inventory with them, finished good inventory, So it depends upon their type of industry. Similarly, what is the time for processing of basically from raw material to finished good? That is also one of the important factor to consider for working capital. What should be the working capital given to them? If it is a simple trading or simple STP format, then the working capital requirement will be low. If it is a huge process, which takes 3 months or 4 months or 6 months to convert raw material into finished good, then the time for processing is high. So we have to calculate working capital in a different way. Similarly, what is the policies? What is the policies for creditors? How the company is providing credit to their debtors? If they are giving on sale basis, cash basis, discount basis, then the working capital requirement will be different. And if they are giving on higher credit basis, say 6 months, 3 months, 9 months, then their working capital requirement will be different. Similarly, if they are getting the stock on credit for longer period, their policy will be different. And if they are buying from the market at a competitive price, their working capital liability will be different. And the most important thing is contingent liability. If they are getting the thing through LC, or they are getting the thing through guarantees, their goods, then their working capital requirement will be very, very low. So there are many factors which makes working capital requirement for each industry different. Now, where the issue comes whether we are doing the asset financing or we are doing the deficit cash flow financing. So we have to first decide. Now, RBI has decided that in 50 crore and above, you should always go for cash flow deficit financing. But 50 crore and above, we generally go for this second method of lending, or MPBF method of lending, where we calculate different type of MBBF. And in cash flow funding, which is 50 crore and above, generally we go for cash flow deficit funding process also. We go for second method of funding also. And we have a different schematic, specific industry-wise format, where just like for NBFC or film industry, or say startup industry or software computer industry, there the working capital calculation is done in a different way. So I will not say that there is a general prescription for every type of industry for calculating working capital requirement. There is always a different way of calculating working capital requirement. The first thing I want to convey is it is not only MPBF which bank is calculating. There are many specific format. NBFC is the most prominent format which is now being used, where we see many different things other than this MPBF or something else. So first of all, I want to make it clear that industry-wise, we have to see a lot of things. What are their policies? What are their products? What is the industry? What is the seasonality? Many things we see. Ultimately, working capital requirement depends upon the operating working capital cycle of the company. What I have to say. Operating working capital cycle means what are the raw material period cycle, what is the work in process period cycle, what is the debtor period cycle, what is the creditor period cycle available to them. And when and the simple formula is, I generally write in a simple formula, operating working capital cycle is equivalent to R plus W plus F plus D minus C. This is the simplest formula we are using to give the idea of how working capital cycle is being created. And this working capital cycle is useful for banker also and for promoter also. He can check from it where I am losing the money, where I am keeping the idle asset, or where I am keeping the cycle higher. So if he analyze that cycle O is equal to R plus W plus F plus D minus C perfectly, he can optimize the working capital cycle, he can optimize the working capital fund, he can optimize the working capital loan from banks, and his profitability will be increased. That is my view on this. So we should not think only MPBF and cash flow funding is the way of financing. There are many ways, just like in cash discounting, we do different type of calculation. In LRD, we do different type of calculation. So there are many methods which is being used for calculation of working capital requirement. So it is a vast subject, and now everybody has to take the basically the help of computers and tools and business models to come at a conclusion whether this type of funding is to be given or that type of funding is required by the company or not.
Very nicely, Taneja sir. My point is with not fund-based limits. We're talking about how you assess, because you are taking a total other current assets.
Yeah.
Minus other current liabilities.
Yeah.
So for non-fund based limit, it is of the 1 day. Balance sheet
Okay.
1 day.
Okay.
Lekin the certain time the creditor level is not available on the 31st March. So for a assessment of the non-fund based limit, how you assess that limits and
Okay.
how the margin can be also be considered for the non-fund based limit under assessment of the current assets.
Okay,
So,
sir, I will describe in the simplest way. I will not go into very complex detail.
yes.
Ki whatever non-fund based limit is allowed and any stock received or any raw material received against that LC limit, we are reducing from the total raw material available to the company.
Okay.
Similarly, if he is taking, say, supplier financing, channel financing, or he is doing factoring, so that debtors we are reducing from their list, and then MPBF is calculated on balance creditors and balance debtors. So the formula is same. Only you have to reduce the figures which he has availed the benefit through non-fund based limit. If he has used LC limit, we will be reducing the raw material which he has got against that LC limit or BG limit. And if he has used factoring or channel financing, we will be reducing the debtors to that extent of, and then we will calculating the same MPBF on the basis of reducing those limits utilized, and then we will be calculating the MPBF for fund based limit.
That means current assets as on 31st March will undergo a change. So
For calculation purpose.
the MPBF,
it will go under change.
You are undergoing a change for that.
Yes, sir. Yes.
No. And
Yes,
what about the margin? What about the margin?
Margin we will calculate only if that company is giving, say, channel financing company is giving at 0% margin, we will reduce 0% margin. If they are giving at 10% margin, so we will add 10% and we will reduce accordingly. But for the purpose of our calculation, those balance and margin will be reduced, which they are doing. For
non-question, that's a capital intensive industries.
Yeah.
This formula of working capital cycle will never apply. Because a capital intensive industry, they are taking about 9 months or 1 year to manufacture the machinery. So he want a working capital limits. In that aspect, how you consider, Mr. Tanejani?
Sir, we are considering even working capital requirement for 3 years period also. If the cycle is, say, 2.5 years or 3 years.
Yes.
So we are taking it.
That's why for my participant or the members or even a chartered accountant, some are sitting here. So this is a valid information. So you do not say the current assets, if payable within a period of 6 months or 1 year, it can be 3 years also in certain capital industry. Because this is a capital intensive industry. It depends upon the manufacturing cycle of that company. I think this is the most important. Very, very, very intelligent man. And you are thinking explain very clearly to this person. Mr. बांसल जी अनम्यूट करेंगे आप क्या अनम्यूट कर सकते हैं क्या बांसल जी have any view on this what you understand of the strength of the balance sheet have any view on that Mr. Bansal we are not getting you Mr. Bansal we are not getting your voice so very difficult to talk to you so please see that something can be done देखिए कुछ कर सकते हैं मिस्टर बंसल तो you are on the mobile or you are from the this laptop Mr. Bansal I think we are not getting him so I am now coming to Mr. Gupta ji when we are talking about Mr. Gupta we are talking about optimization of the balance sheet we are saying where is some word is optimization is there is the balance sheet can be optimized somewhere have any view on that Mr. Gupta
See, optimization will not be the correct word for use for the balance sheet because a balance sheet should not be window dressed. Basically, it should show the correct picture as it is in the real world. Basically, so we are preparing the balance sheet historically, like the events and transactions happens earlier, and we prepare the balance sheet at the end of the year. So optimization can be done during the year, like the company can plan like how its working capital or how its other ratios are going throughout the year. Like we cannot do it after the financial year.
Hey, Gupta,
Optimization.
my point is simple. Let I should summarize the position. Like a sugar industry, you're talking about a sugar industry, where the
Yes.
season start in October, September or October. At
Sure.
that time, they want to store the canes, sugar canes. At that time, you change the balance sheet of the sugar industry or cash flow, because that sugar industry working capital limit are being assessed on the basis of the monthly cash flow, monthly input are there. When we're talking about December or October or November, the balance sheet will be optimum because the inventory level will be highest and receivable will be very, very less. So, have any view in that seasonal industry? Of any your experience? Because you are a speaker in so many places also.
Yeah,
That
basically, I belong from a mining area, so we have lots of mining kind of industries here related to mines, ores, iron ores, coal, like that. So we have not gone through the seasonal kind of industry. So this is
okay.
not the right
But
question for
mining is also very important aspect, sir. Mining, yeah, mining is also. This is also not a seasonal industry. Mining, because
No, this
certain
is not a
period.
seasonal industry. This is an industry which runs throughout the year,
Yes.
and we have iron ore mines here in the Odisha. So we see that the we have seen the cash-rich companies because they are selling soil and the at the cost at the value of gold. So we say that मिट्टी को सोना के भाव में बेचते हैं हम लोग यहाँ पे. So so we have seen those kind of things here.
Very good. So, you are sir, the trustee of some social organization also.
Yes, yes.
Whether something is social economics, something of that. We're talking about the social, we are talking economic social development or social development or something like that. Have any view on that social development or something?
Yes, basically, social economic development is very important part since CSR was introduced in the Companies Act, and we have seen CSR funds working in a very correct manner because companies are apportioning those that 2% towards the corporate CSR funds, and that fund is going in the development of the area. We are seeing in this area like we are from mining belt, so district mineral fund is the fund here which is collected for every ton of iron ore produced from here. So that fund has been used correctly in COVID times also. So lot of efforts have been taken for socio-economic development through the corporates themselves. So very important role corporate plays in the socio-economic development. And if we talk about global part, so green we are moving towards the reporting of these things like lesser pollution generating. We are reporting these kind of things in global perspective. If we are talking about Europe have come through these standards. I am not recalling the name of those standards. So those standards are coming in near future in India also, where we will be reporting all these things in this balance sheet.
Very nicely. I just am coming to some question. So,
Yes,
here is Mr. Deepak Desh. He has some suggestion. So, not any question for that. What actually show no finance available due to the DP is not there. He just some have a reference. In a running business, LC requirement would vary. When the bank does not open LC, which is the criteria available from the market, how the bank fail to convert the criteria level into LC limits? Have any Taneja ji, have view on that?
sir. Can you again repeat the question? Actually, I
In
could
a
not.
running business, LC requirement would vary. Definitely.
Yes. Okay.
When the bank does not open LC, which is a criteria available from the market, how the bank fail to convert the criteria level to LC limits? I think
Basically, sir, I want to make all fellow associates one thing clear. You have to come with their request at one time. Generally, क्या होता है कि when the problems comes, we go as a crisis to the bank. Bank has a system. We take 3 to 4 months to decide. So whatever your requirement is there, or whatever you feel the eventuality, you put the application at first go. I have seen that people will come, get sir, convert after 3 months, convert LC to my normal limit, or normal limit to LC in case of crisis. So bank has a process which takes a lot of time. So my request to all fellow members is that you basically do the research, you do all the permutation and combination, what can happen, and request the banker to allow me convertibility from LC to say CC limit or
there
LC
is a
limit.
problem why if creditors under the LCs are there, if you want to convert it, as Mr. Taneja is telling, you can get it converted.
Yes, simple. So my view is if you not ask to the bank will not come. My view is very simple.
Yeah, simple. So Mr. Deepak also clarify optimization mean. Mr. Gupta ji, they are telling this is a better ALM, assets liability management. What he talking about? This is optimizations. What he talking about? Thank you, Mr. Deepak. Then we are talking about SC Agrawal. So Mr. Gupta ji is asking from you, can you help me to get some money under CSR funds of any of the to set up rooftop solar system on the roof of 80 family to snack to my village? To have any CSR, you can manage funds.
So, Agrawal ji, I would like to answer here. Like all the companies who have CSR commitments, they have defined a CSR program, which they have to disclose also in the balance sheet. So I will really keep this in mind, and just I will request you to share your email or something like that, so that I can communicate with you in future.
Very, very nice. So, Mr. Bansal ji, whether I can talk to you, possible? Mr. Bansal, you can unmute yourself, possible? You unmute. Hi, Bansal ji, आपकी आवाज तो सुन ले, कुछ नहीं तो आवाज तो सुन ले सर आपकी. बताइए, what is the strong balance sheet? As per you, now you listen to Mr. Taneja, you listen to Kanta ji, you listen to Mr. Gupta. Have you a surprise position from your side? Of stock, what is it? Somebody is asking, Mr. S.C. Agarwal is asking, what is strong balance sheet? So have any view for that, Mr. Bansal? Bansal ji, I am not getting you. Your voice is not audible to me. Sorry for that. Your voice is not audible. तो प्लीज अनम्यूट कीजिए. ये तो आपने म्यूट कर रखा है. अनम्यूट कर लीजिए माय डियर मिस्टर बंसल. वेरी डिफिकल्ट. Bansal, sorry, I cannot catch you because you are not unmuting it. So please unmute it. And now you tell, please, speak. बोलिए. हमारे बांसल साहब बहुत सीनियर हमारे आदमी हैं. I think he is more than 80 years. So vast experience. So I think somewhat problem with this computer. सर आपकी आवाज नहीं आ रहा मिस्टर बंसल. Unmute कर लीजिए. Sorry for that. So Taneja sir, lastly I want to know, have any advice to the participant, Mr. Taneja?
Okay, sir. I will give only 2 simple advice. First, I have given, again I will repeat, ask the bankers for limits or what type of facility or what type of interchangeability at one go. Don't go when the crisis comes, because the crisis will be over, you will not be getting the limits change. So first thing is you have to properly assess what is the requirement and what application has to put. My second advice to them is think of peak limit and non-peak limit. But Mr. Gupta raised earlier also, why we are keeping fund in current account and utilizing the full limit. Because there is a fear that bank will reduce the limit if we are not utilizing the limit fully. So what I will suggest you can ask the banker to divide the limit into peak limit and non-peak limit. Then this issue will resolve and you will have a better profitability. And third issue what I wanted to convey improve your internal rating, improve your external rating, be disciplined with the bankers, because now bankers have different model. They are not depending upon personal relationship. They have also gone into faceless type of I will say analysis of balance sheet and other things, faceless appraisal, where many things they are unable to see, which the branch is knowing. So now you have to keep the discipline intact as you are keeping with other organization, so that your reputation as a faceless banker should remain as it is. Because we have seen that branches are very comfortable and confident about the party, but the appraiser or sanctioning authority feels otherwise, because of certain deficiency in the operation of the account, like non-payment of installment on time, non-payment of interest on time, I will say realization of LC on time, or bank guarantee getting invoked, devolved. So these type of small things company has, but they are basically casual, or they think it's nothing will happen. But everything is now getting recorded in the bank, and that dent their rating, that increases their pricing also gets increased, their concessions get reduced. So my request to all the companies or the representative of the company, these discipline has to be brought to the company sooner or later. Then they will be able to, I will say, dictate the bank to what they want. Otherwise, banker will say bye bye, goodbye. We can't do more than that.
Very nice, very nice, Taneja sir.
Thank you.
So, Bansal ji, have any view, Bansal sahab?
So one question I have, Taneja sir, you talked about.
Please.
Sir, Taneja sir, you talked about rating, credit rating. So recently, RBI barred one rating agency, that is Brickwork rating agency.
Not
So,
RBI, not RBI. SEBI has.
Sorry. SEBI has. Sorry, I missed that. Yeah. So SEBI has barred that agency. So how do you see that? Why is the transparency in this rating? Because we have seen a lot of disputes coming in when we go for financing. So there are lots of credit rating agencies which come to us like, yeah, mere se kara lijiye, matlab, get it done through us. So what's that?
Okay, I will come to that. First of all, I will clarify for brickwork. RBI has not debarred. Even banker can take till today. They can take brickwork rating. They have got stay also from appellant authority.
Now decided, Mr. Taneja, it has already been devoured by
No. Yesterday news, they got the stay. They again got the stay.
Achha.
So that what I wanted to. But I am not going into that. But the first I want to clarify what is the factual position. Secondly, about rating for bankers, it is only a one point. On the basis of rating, they are not giving any loan. They have their own internal rating model. Yes. On the basis of that, they do the appraisal. They have own appraisal system. It is only a tool or a point which gives a added, I will say, hand to them whether they should consider the proposal or not. If it is, and the second most important thing about that rating is they have to keep a capital that is called CRAR on that loan amount. So if that capital, if the rating is C or say BB, they have to keep 150% of the capital. If it is triple B, double A, for a triple A, you have to keep 20% of the capital. But so for the banker, it is my view, maybe wrong, maybe right. For the banker, if the credit rating is good or better, we don't mind. But we want AAA rated, all AAA rated, because we are having our own appraisal system. We don't bother about that credit rating, but it is important for capital allocation. So for us, the company who is giving reasonable rating is good. If some company is giving very conservative rating, I will give you the example. It should not be quoted. When there was a problem in CARE, CARE was very, very stringent. They reduced the rating of every company from AA to BBB directly when their issue of ILFS came. So this type of rating will not help. Ultimately, who is the loser? Banker is the loser. They have to allocate more capital because of downgrading of rating, though the company was performing in a good way. I will give you one example, aviation industry. In aviation industry, when there was a complete lockdown for 3 months, every rating agency reduced from AA to triple B or A to triple B. So we have to allocate 50% more capital for same loan amount. So why will accept that rating? So we like those credit rating agencies who give reasonable rating. I will not say that they should give liberal rating, reasonable rating. If it is a very conservative, it is lost to the bank. We are giving, we are financing, and we will financing always. But it is lost to the bank because we have to allocate more capital for the same loan. We cannot give more loan with the same capital which we have. So rating agency, for us, it is only one point, which is mandated by RBI, and we have to allocate the capital. But for other things, we do our own appraisal system, which is unrelated to the rating agencies.
In my view, credit rating is just a cherry on the pie.
Yeah.
Only
Right.
the thing that need to be considered while granting a loan.
Yeah. It is only one factor. It is not
One
a
factor. It is
important
cherry.
factor.
You have got
deciding.
additional satisfaction that this rating is also good.
Yeah.
But we need to see the financials of any organization before granting any loan. And one
So
more
we have our own internal system which we go.
Madam Kanta Sharma ji, there is one question for you. So I think this is only suggestion. Cash in hand is in core in balance sheet. What to make a payment, a check deposited in the bank account, and then payment is made. It means the balance sheet is not a strong balance sheet. Can we say that this advisor are sleeping? I am right. He's asking whether when a cash in hand is higher, he is not depositing in the bank account. Why this chartered accountant was sleeping?
Cash in hand not deposited in bank is not allowed these days because of the 3CD requirement. There's if more than 10,000 cash payment is done or received, it is to be reported. So income tax department will take care of them if they are keeping more cash rather than in what is there in the bank.
Not a point, because you are in the balance sheet, you are having a current account, or you are having cash in hand with you. If cash in hand with you, definitely you can go and deposit with the bank account. There is no point. His point was
you cannot keep cash. More than 10,000 you have to report.
You can report
transaction.
Deposit it. There is no restriction for that. Up to 2 lakhs rupees, there is no restriction for that. Chale, that is the point. So, madam, have any view for lastly, you can say to the participant anything from your side?
Yeah, I would say from the banker's point of view that when they grant loan on the basis of projections, their rating projections, their anticipated the projected balance sheet. But when it comes to while granting, everybody try to show the rosy picture that they will procure money and they will invest so this and this way. This asset will be brought, this turnover will be done, this will do expenditure towards employee cost, production cost, and they show very rosy picture. When it comes, once the loan is granted, the real picture comes. So banks need to be very prudent on this, that they need to see the progress of the bank. If it is less than 250 crore, then they need to do monitoring themselves. But beyond 250, now the ASM mode is there, that ASMs are appointed to keep a track. But when there's less than 250 crore, bank should be very prudent about the progress of that organization where the loan is granted. It should be disbursed in the staggered manner, not in the one shot, so that if the company is under default, is not satisfying the criteria on which they have been granted the loan, they should be stopped then and there, and loan can be recalled also. So banks should be it is for the better health of the banks, the way the things are happening nowadays in our country, which past has happened. Now the banks are very prudent. They are not giving loan very easily, but they need to be very prudent on the financial of the quarterly financial result or half-yearly financial result should be taken care of, and these should be matched with the banking transaction. Making a balance sheet is a different thing, and it should match with the transaction on the ground in the real status. That need to be taken care of. That is very analytical skills you require to check whether the balance sheet which they are presenting to the bank, whether it really exists or not.
Thank you, madam. Your banker point of view you are talking about. Like I'm just telling you, what bank is monitoring every month, even every day. If they all account operation are being monitored.
So why it goes to NPs? Why most loans go to NPA?
So, banks are monitoring. You, monthly stock statements are there. Even monthly selector operation data was available with them. Even quarterly information system was available at that some time.
Monthly stock statement is there, quarterly there.
Banks are dispensed with, लेकिन that system is prevalent. ऐसा नहीं है. Monitoring is a proper part. Without monitoring, you cannot control the account. That is a proper way.
Not only
I think
the
your suggestion is well taken. From a banker point of view, there should be proper. And the bank is not giving a limit at a one to go. It is going as per the drawing power available in the account. So as per
yeah,
strong statement, they will have to.
and there should be physical visit to the site where
I
the
am,
protection is happening.
what is your point is okay. Mr. Bansal, have you are there? We can talk to you. Unmute कर लीजिए, Mr. Bansal. Unmute नहीं हो रहा आपसे. Say something, Mr. Bansal. Mr. Bansal, have any seen? No. चलिए छोड़िए Mr. Bansal. So now we are coming to Mr. Rohit Gupta. Rohit Gupta ji, have any view, last viewpoint to our participants?
Basically, I will like to share my views, practical views. Like whenever we are doing a business, we should keep in mind that the if we are showing our transactions and all the events correctly, and we are moving towards a strong balance sheet as discussed today, we will be able to access the finance very easily, because the access to finance is very important in any business. If we want to grow, we have to have funds in our hands, otherwise we will not be able to grow in future. So and that depends only on the financial health of our company, which is shown in the balance sheet. So this is the only suggestion which I.
Thank you, Mr. Gupta. Thank you, Mr. Sanjay. Thank you, Mr. Bansal Saab. I could not hear your voice. I cannot have your thoughts also because some technical problem with you. And Madam Kanta Sharma ji. So lastly, I'm thankful to all my eminent speakers who have given their practical experience. I am getting some feedback. They are telling this is an excellent program. Regarding a non-financial person also can understand what you talk about. I think this is a appreciation goes to all of my eminent speakers, because without a non-financial person can also get some feeler from your talk, how a working capital limit can be assessed and what are the strong balance sheet and what are the strengths of the balance sheet. I think that matter we have discussed. Although we could not hear anything from Mr. Tarlokinath Bansal, some technical problem were there. So I'm really deprived of for his thought, because he has such a 58-year experience in the fields and he is a very intelligent person. Sorry for I could not hear him. So lastly, I'm thankful to all my participants, all my members of the association, all the banker brothers, and all the entrepreneurs who always oblige me in all the webinars. I think under the series of the association, we have done the 24th webinar during this financial year, and under the banner of the Resurgent India. So this is 133 webinar under the series of the Resurgent India. So I'm also thankful to my that team. They talk about SP Singh, Mr. R.K. Parida, and Mr. Lokesh, Mr. Devasish, and all behind the screen who is helping me regarding the question, regarding their talking points, regarding other things. I'm really obliged to these people. That's why I'm telling you, Association for Financial Advisor was set up in October 21. And during this period, we have more than 400 members. The main object of the association was to impart the knowledge in respect of financial matters to the entrepreneurs, to the bankers, and to my friends, members also. This is the main object. For the Resurgent India banner, because we are a merchant banker, we are investment banker, we are in insolvency, we are conducting a technical viability study, we are preparing DPR, debt syndication, private equity, even government advisory services, we are doing it. If any requirement of any entrepreneur is there, they can approach us. So we will be happy to help in all respect. So lastly, I'm thankful to my eminent speakers, and all the recording, other things we are available on YouTube and other places also. We will share with you also our recording and feedback received from our participants. With this word, I'm thankful to all the speakers. So, Mr. Bansal, I request you to in future, please take care. Your technical other things should be proper so that we can listen to your advice, because people have been deprived of your having your experience of 58 years. So really, sorry we cannot listen to you. So thank you very much. You said I will end this session for that. Thank you very much. I'm very happy. Thank you.